This is Policy Discuss. If you just joined us, the show is the Front Burners. It's segmented. We just finished with news analysis. It's time for us to look at some policy issues. And we will begin looking at Ponzi scheme versus digital investment. Ever heard of Ponzi? Are you familiar with it? Have you ever been a victim of a Ponzi scheme? How do you identify Ponzi scheme? We live in a digital era where a lot of things are done digitally, including investment. So how do you know which is a legitimate digital investment? This morning we have Andrew Ogbe, who is a digital investment consultant. He joins virtually from Abuja this morning. Good morning, Andrew.
Good morning, Blessing. Thank you for having me on the show once again. It's good to be here.
It's great to see you. All right, let's look at the background for this conversation. So the Economic and Financial Crimes Commission, EFCC, raised an alarm sometime last week over the activities of 58 illegal Ponzi scheme operators defrauding Nigerians under the guise of investment opportunities. Now, according to findings of the EFCC, these companies were neither registered with the Central Bank of Nigeria nor the Securities and Exchange Commission, SEC, making their operations illegal. So let's do some distinction between what Ponzi scheme is and what digital investments or digital instruments are. Let's begin from there.
Okay, thank you once again for having me on the show this morning. I also saw the release by the FCC on their portal, and I think it's highly commendable by the FCC. Now, for Ponzi schemes, I think Ponzi schemes thrive on people's greed, right? And we have so many of them in Nigeria. So, but what, in the first place, what are Ponzi schemes, right? What are Ponzi schemes? Ponzi schemes are online fraudulent scams, right? That pays people, new investors, that pays previous investors, old investors, with the funds or the capital of new investors. And they tend to slow down. These tend to slow down as new investors stop coming into the system. So eventually the system crashes. So a Ponzi scheme is simply any investment scheme, now this time around online investment scheme, that pays old investors from the funds of new investors. It's more like robbing Peter to pay Paul, right? And these things tend to slow down because it comes to a time when new investors are no longer interested in coming into the system. So certain investors who are in the system gets defrauded. So for most Ponzi schemes, it is majorly earliest investors that benefit from these schemes. Digital investments, on the other hand, are investments in acquiring digital assets like cryptocurrency, stocks, which is shares in companies and the likes. Unlike Ponzi schemes, unlike digital investments, Ponzi schemes promises high returns with no justifiable economic strategy, right, behind how the money is being made. It's just robbing one person to pay the other person. But digital investments, on the other hand, involves investing in digital assets like cryptocurrency. We have Bitcoin, Ethereum, and so many other altcoins, and also investing in stocks, shares of companies, right? So this is just the basic difference between digital investment and Ponzi schemes. Ponzi schemes, remember, takes the funds of new investors to pay old investors, and they just continue the circle until it no longer holds, until the bubble bursts. So that is what Ponzi schemes are.
Sorry, Andrew, good to have you on the show this morning. How is this different from network marketing that we see on a daily basis?
Okay, yes, there is a very big difference with network marketing and Ponzi schemes. With network marketing, one of the attributes of Ponzi scheme is that they have no product or service that solves human problem. There is no verifiable product or service. Now, network marketing, on the other hand, would have products or sell services, right? There are products or services attached to network marketing. So network marketing is just a business model. It's not actually a business on its own. It's just a business model. For example, you sell toothpaste, and you decide that rather than following marketing your product using traditional media, you would rather pay your promoters, people who promote or sell your product. And as they sell your product, you pay them the money you are supposed to pay to other medias to promote your product or your service. But Ponzi schemes, on the other hand, have no products, they have no service, there is no problem they solve except just
All right,
and network
go
marketing.
on, Andrew. Still on
Yeah,
the network marketing, we've seen cases where, or I've seen cases where sometimes it starts as network marketing. Along the line, the product that the particular network is trading on disappears, and it becomes a thing of referral, or how many persons you're able to bring, you get money off them. So if nobody is coming, you're not getting money. There is no actually product that the particular company or network is now trading on. So at what point, if we're talking about Ponzi's now, what should people look out for? Are there certain characteristics that could show that maybe a company that starts well has derailed from its legitimate operations and is now gearing towards Ponzi?
Okay, I think that's very easy to do. Number one is when the focus is no longer on the product or the service that the company provides. When the product, the focus is now only on monetary gains, because actually, every business thrives on sales. Somebody must sell the product for the business to thrive, right? But for the business to also thrive, the product or the service must be solving an actual problem. It must be something that people are willing to buy. So a company that begins to derail from what its product offerings and its service or its service offerings into just how the compensation works, right? From then, you should be able to know that this is beginning to raise a red flag. They are no longer producing. They are no longer, you can't trace their product. When people come into the system, they don't have access to either their product or their service. The problems of the people are not being solved except for just the money, 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 because money actually follows added value, right? Money follows added value. So when value is not being added, then there is no way that money can be earned. So when people come into in quotes, a Ponzi scheme, or what some people might want to think is a network marketing business, that they don't have verifiable products that solve human problems, then you begin to know that this raises a red flag. Like I was invited to see a particular, I call it a Ponzi scheme, and that's because I was able to verify it. And what did I do? This particular online platform, according to what they have on their website,
Oh, we'll get back to Andrew and continue a conversation with him when the connection challenge is resolved. But Doc, look at this. So people want to create multiple streams of income. That's part of the reason why some persons will want to make investment. And you know, you can invest in a business where you are a passive participant. So all you need to do is just put your money in there and then it grows it for you. But let's find out what Andrew thinks about this. He's back. So Andrew, please finish your thought. You were giving us an example of something you've experienced. Can you go on with that before the next question?
Okay, so as I was saying, this particular platform that I was invited to see, they claim to be an e-commerce store, and they pay investors from the profit earned from shopping. And all I needed to do was to go through their shop, their e-commerce store, to see the number of products that they have. And this particular company barely has 20 products in their shelf. On their shelf, they barely had 20 products. So, and it just triggered my common sense that if you are selling just 20 products and you are asking investors to start with a minimum capital of $100, it doesn't make any economic sense. Then where are you getting the money to pay investors? All you are doing is probably just robbing Peter to pay Paul. So that alone, even though they have a product or a service, even though they claim to have a product or a service, you also need to verify if it is economically justifiable, especially based on the returns that such platform promises. So that is what I wanted to say.
Yeah, I want to find out. You just mentioned your experience and how you were able to find out. Beyond common sense, many Nigerians are not digitally literate to be able to carry out this kind of a search to establish whether a scheme is a Ponzi or not. Because I had one about 2 years ago, and they were all there. Everything around them seems right. There were CAC registration. They even obtained a school license from EFCC, which of course they put on their website and the rest of it. And then they created a WhatsApp where you actually could meet with people who were practically on this scheme. And all they said is the fact that they were doing trading, and it was AI trading. And then, of course, you can actually see in real time how the trading is going. You can see, just like in normal stock market, sometimes it's red, sometimes it's green, to show that there's profit made or something that is not being made. And at the end of the day, you have the window like a week to be able to do your withdrawal. And then, of course, they had a fiscal office here in Lagos. Overnight, a lot of things, there was a glitch on that site, and then by the time people went to their fiscal office, overnight they have removed all the things that they had there. And so many people lost dollars. How else, apart from common sense, can we actually say this scheme is Ponzi or it's a true digital investment platform?
Okay, thank you for that question. I know that quite many Nigerians would have had a similar experience or know someone who have had a similar experience. I would like to first establish that as long as it's an investment, there are risks involved. We need to first clearly establish that fact, that every investment has risks involved. The risks can either be a high risk, medium risk, or a low risk. Having established that, you would now know that you shouldn't put all your eggs in one basket, no matter how promising it is. No matter how promising it is. And it is sad to say that many of the ROI business schemes in Nigeria have not lived up to expectations. Many of the ROI, I'm in the online space, and I can tell you for a fact that many of the online ROI platforms have not lived up to expectation. So if you are going to invest in an ROI platform, what do I mean by ROI platform? A return on investment, where you don't have to put in any work. The company gets to manage the funds and just pay you part out of the profit at the end of a certain period. Any kind of business like that is a high-risk investment because you are not in control of your assets. You are not in control of your funds, of your capital, because the company is trading, even if it is a justifiable and economically justifiable business model that they are operating, especially with AI trading. Now, the questions Nigerians do not ask, or many people do not ask, is that who takes the fall when the company does not make profit or when the trading doesn't make profit? Every expert trader will tell you that there are days they make losses and there are days they make profits. The only thing the best traders do is that they tend to maximize their profits and minimize their losses to make sure that the number of times they are winning is much more outweighs the number of times they are losing. But you see, you promise people promise of guaranteed returns, and these returns are even high returns, right? So the question is, who takes the fall when business goes bad? They may start out as a very good business and have all the registrations, just like you said, and having, I was going to say that having all the registration, be registered with all the regulatory bodies is still not a guarantee that a business will thrive, that a business is sustainable. It's still not a guarantee. You can have all the registrations and the business model still fails, right? Any business that promises more than 20% annually, 20% returns on investment annually is categorized as a high-risk investment. And when something is high risk, it means it is highly volatile and can go against you at any time. So if you are investing in such a scheme, you should invest with that consciousness, knowing that I don't have control of my funds and anything can go wrong at any time. And if it goes wrong, I'm able to bear it. So you must have that risk tolerance, that level of risk tolerance to be able to invest in such things, even if they are registered, because they are the ones in control of your funds. And like I said,
do they qualify to be called Ponzi?
Okay, I may not categorically state that any business that fails that way is a Ponzi scheme. I may not categorically state that because even real business that trade in physical goods and all that, even still fail. For example, I was listening to Paul Owanibe, the founder of, the owner of Landmark, and he said that I think in 2023 or so, he invested in 7 different startups. And out of these 7 startups, only 3 made him money. Only 3. It means 4 out of it made him losses. He lost money out of 4. So even the best in the field still lose money, right? So even if they promise everything, they have all the registrations and everything, you need to categorize it as either a high risk, a medium risk, or a low risk investment. I may not categorically say that they are all Ponzi scheme. A business is a Ponzi scheme because it failed, because businesses fail every now and then.
All right. Now, to follow up on that, not being able to categorically differentiate a Ponzi from a digital investment because of the way they appear or their modes of operation. So there is digital investments. You've named some of them. There's crypto and others. Now let's talk about crypto. In what way can a Ponzi scheme disguise as crypto? Let me give an example to buttress or to give a clear view of my question. So once upon a time, there was a Ponzi scheme, or there was a scheme running where those who had signed up for the scheme had been told that it was digital mining or digital farming. So they were putting in money, and then it was a stated return that they would get. And sometimes it increases how much return that they get. So people started investing. Then after a while, about a year or thereabout, that stopped. So those who had put in money had their money trapped. And when they went to the fiscal office of those who were in charge of the business, and then they were told that it happens. There are times when a particular coin or whatever crashes, and then you have to wait for it to rebuild. But time went on, nothing happened, and so their money went like that. How do you differ? What are the red flags for any business that comes or any investment that says it is crypto? How do you identify which is actually crypto or clearly a Ponzi scheme?
Okay, thank you for that. I'll first of all state that cryptocurrency is a highly volatile asset. Highly volatile asset, right? There are no guaranteed returns with cryptocurrency. We only have speculative returns, right? People speculate around these particular assets. Now, for you to be able to, there are Ponzi schemes that pay with crypto. That pay with that, their payments model. It's just like there are Ponzi schemes that for you to get paid, they pay you in Naira or in dollars. Some pay with crypto, either pay with Bitcoin or with Ethereum and any other cryptocurrency. So people sometimes don't differentiate a Ponzi scheme that is using crypto as a payment option or a crypto business itself. Now, for many Ponzi schemes that uses crypto, like you mentioned, the mining of a thing, first of all, like I said, you need to understand that cryptocurrency is highly volatile. And by volatile means they go up in value and they can come down in value. Most people like to focus on only the upside, that they can go up in value, and not the fact that they can come down in value. And these changes can happen suddenly. It can happen suddenly. So you must have what we call an exit strategy when dealing with such investment. You see, there is a popular saying in cryptocurrency that you should be greedy when others are playing safe, are careful, and be careful when others are greedy. It is a very, very important statement when investing in cryptocurrency. That when others are highly hopeful, you should be very, very careful at such a moment. And when others are very careful, you should be greedy. That means you should have an exit strategy no matter the promises that are being given. And any cryptocurrency program that promises guaranteed returns is most likely a scam because it's a volatile market. There are no guaranteed returns. You can only predict the outcome based on certain market forces. Certain market forces can come and push you out of the market. For example, we see what happened with Bitcoin when Donald Trump came into office. And all of a sudden, Bitcoin almost doubled its value. And investing in such people who invested in such assets made crazy amount of money. It's high returns. But what if a government comes into place, into power, and that is not pro-crypto? What happens to it? So some people who try to defraud asset managers who try to defraud unsuspecting people, trying to only talk about the good side, tend to talk about only the fact that, oh, these things, you are guaranteed of XY returns in XY number of times. But like I said, cryptocurrencies are highly volatile assets. And when trading with highly volatile assets, you have to have an exit strategy, when to get in and when to get out. To manage your greed, for most people, they don't learn how to manage their greed. In fact, with trading cryptocurrency, I say that much more than the technical skill, knowing how to, the technical skill, how to operate it, the most important skill to have is how to manage human greed, right? You must learn how to manage your own greed. I don't know if I answered your question.
Okay. Still talking about this Ponzi scheme. We also discovered today we have a lot of applications on Android and iOS on digital trading, even on stocks in Nigeria. A lot of people download plenty of apps. Now, somehow, again, looking at the risk factor that you said earlier on, whether it's high risk or low risk or medium risk, some of these applications don't even connect you directly to the clearinghouse or the stockbroker, like giving you a CS number or the clearinghouse number, but they're trading on your behalf. What's your take on some of these applications, even trading on stock listed in Nigerian markets?
Okay. Well, I said it earlier. I said any investment that is not within your control, anytime your capital is not within your control, your capital is at risk, right? Because apart from human greed, people can get greedy and somebody tries to rug pull the company, or a business can go bad and you lose your funds. So you need to know that once your capital is not within your control, it already labels it as high risk. It's already, especially when it has to do with online investments, it already labels it as high risk. And when somebody is managing your assets, now the question is this: if I'm managing your assets, whose interest do you think I should protect more? Yours or mine? If I'm managing your asset, of course, I'll protect my interest. I'm protecting your interest as long as your interest aligns with my own interest. But if I am at the crossroad where I have to choose between your interest and my interest, I'm going to choose my interest. And that is just basic human nature. It's basic human nature. So any asset, anytime you're going to trade with any platform that your asset is not within your control, it's already labeled as high risk. And you should trade carefully. It doesn't mean, because it's labeled as high risk, doesn't mean people shouldn't do it. No, that's not what it means. It just means that you should have your exit strategy. You should have your plan in place. You should have the amount you are willing to commit. You should understand your risk threshold. All these things are very important. You should understand, okay, what is the time frame I have for this particular investment program? And you see, one other thing to also note in trying to spot out Ponzi scheme is to always try to research. People should research. Before you part ways with your money, research. If you can give out your money, your hard-earned money, then I don't think it's too much for you to research. And you don't have to do, it doesn't have to be somewhat an extensive research. By simply going through the social media of a particular project, and when going through the social media, don't check what the company is saying about itself. Check what other people, other investors are saying about the project. See, no matter how careful a company is, a Ponzi scheme is, you see, you always find one loophole, no matter how careful, and you can easily spot it if this investment is for me or not. Check, research. Then research also the founders of such a program. Research the founders of such platform. What have they done before? Do they have a track record of excellence? Even the person or the person promoting it, do they have a track record of excellence? Of course, I'm not saying that they should have a 100% record, because in the world of business, you win some, you lose some. So even the best in the field would have lost at some point. In fact, if you have not lost anything at some point, if you've always won, it's also a red flag. So, but you need to be able to research who the founders are. Do they have um, verifiable track record for you to believe what they are saying about themselves? You should also be able to research their social media platforms, their Twitter. What people are saying in the comments is very, very important. Their YouTube. And sometimes you will see that their websites are shabbily done. For example, when I go through some website, I just before doing any extensive research, I know that this is already a scam because they don't pay so much attention to details. Some of these things are just shabbily done. But like I said, you can't always be 100% sure. Every investment comes with its own risk.
So there are investment companies that have investors putting their money and they say it's for real estate. Some of them have been able to give people money on pay return on investment, and some others haven't. And there are those who it's just an investment firm. They're more like brokers. But according to this list released by the AFCC, we found that the names, even the names of the companies, the 58 legal companies, many of them are investment firms. Some are agri investment firms, some are into stocks and all that. Even with this list, we find that some names of these companies, you still find them existing. There was one in particular that the Security and Exchange Commission put out a notice, a disclaimer actually, saying that the company is not registered with SEC, just to warn people. But you still find that their operations are ongoing. They still have physical addresses where transactions are ongoing. What should be a follow-up, aside from just a disclaimer of an investment firm?
I think it's the porous nature of the Nigerian economy that anything just goes. I think this is the work of regulatory bodies, that beyond just issuing disclaimers, there should be a follow-up to clamping down on these investment schemes that take advantage of Nigerians, innocent Nigerians. There should be a follow-up and not just issuing disclaimer, because anybody can say anything on their website. You can say you are registered with SEC, you are registered with this. And also, it's good to also note that because a company is registered with SEC, doesn't mean they are not fraudulent, or they don't intend, because a company can start with good intention and eventually change in their ways as they progress in their dealings. So this is solely the work of regulatory bodies. Once you label a company as a Ponzi scheme, then everything should be done within the powers of those regulatory bodies to clamp down on these companies, to make sure that their websites are no longer functional, their offices are no longer functional, and they warn Nigerians about it. And Nigerians should also pay attention to desist from such platforms. Stop looking for get rich quick schemes, right, without following due process.
All right, so let's also look at this digital investment or digital instrument. You've talked about crypto, which is one of them. Do you mind telling us about some others? What are the advantages? What are some of the risks or challenges that could come with them?
Okay, first is cryptocurrency, like you said, and we have varying types of cryptocurrencies. We have Bitcoin, we have Ethereum, we have Solana, and so many other altcoins that people can invest their money in. But when investing in cryptocurrency, you need to understand that cryptocurrencies are volatile in nature. So they promise high returns, and but the returns are not guaranteed. Okay, market forces can easily affect your investment. Apart from cryptocurrency, we have stocks and ETFs. You can buy the shares of publicly traded companies. Right? You can do your research and look out for companies that you believe in what they are building, and if their shares are publicly traded, go ahead and invest. That's another form of digital investment. Another one is forex trading, but this one, it requires technical skills. If you're not technical, if you're not willing to commit to learning and you just want to commit your funds, I've had people ask me, Andy, I want to give you XYZ amount, just trade it for me and pay me profit. I said, no, I'm not an investment firm. If you are not willing to learn, because many people want to bear the profit, but they don't want to bear the risks involved. If it comes to forex, if you are not willing to put in the time, you don't have the time to learn the skill, because forex is actually, you need the technical skill to be able to survive in that terrain. It's just trading currencies against currency. For example, trading pounds against the US dollar and all that, right? And it's highly profitable, but also highly volatile, right? It can easily, market forces can easily affect the prices and the outcome of this type of investments. So I think these are just a few of some of the digital investments ways people can invest their money digitally.
Yeah, beyond what you have mentioned as looking at website that is not properly done, and then of course looking at investment from the volume of return, what else can you advise Nigerians who are not as experienced or learned as you are in this field to watch out for in terms of falling victim to Ponzi?
I think number one, stop clicking on links and joining any business that you see online, links that are being sent to you on WhatsApp, that this particular company pays so and so, this particular company is recruiting, is paying 50,000 naira an hour and looking for so and so. Stop clicking on all those links. Those things they do not exist, right? They are just trying to capitalize on your greed, right? And your innocence. Stop looking for those things. The second thing you would need to do is, even if you cannot research, there's a popular African saying that says, follow who know road. Find somebody who has a track record of success in this area, in the area you want to invest in. Find somebody who is like a coach or a mentor and follow them, right? Pay for their course, attend, find a way to get into their inner circle. Find a way to get into their inner circle so that you can do as they do, right? You can follow and know what they actually do to make money. If you cannot research on your own, then at least you can follow somebody who has done the due diligence and done the work for you. That is just one of the simplest way to go.
So the AFCC, in addition to warning Nigerians about some of these Ponzi schemes, was saying that for those who have been victims of fraudulent investments, should come forward, and efforts are ongoing to possibly recover funds. Is this a possibility? Is it even possible to find the faces behind such investments?
Okay, well, you see, we all have digital footprints. It may be difficult to track down the faces behind this, but if due diligence is done and we keep checking, you would always find trace, right? There are always clues, because even though things are done on the blockchain, there are still traces. So, but of course, some are difficult to find, some are easy to find. So, but it now depends on the willingness of the institutions, the regulatory authorities involved to search these things out. It may take a long time, but these things can be searched out if there is the willingness to search them out, because every one of us leave digital footprints. And sometimes, no matter how careful these fraudulent people are, they will make some flaws. There are always loopholes that can be latched up.
Yeah.
That
Okay.
Promising Nigerians that they will recover their funds, I would say it's a 50-50 thing. Don't put all your hopes on it, right? It's possible that your funds can be recovered, and it's also possible. I have also lost funds. I'm not speaking as someone who don't have scars. As professional as I may sound, I have also lost funds to schemes like this, and there are many that I didn't recover, but I knew what I was getting myself into. I trade with what I am able, I can afford to lose. So the first thing is trading with what you can afford to lose, so that if anything goes wrong, you are still good.
I just want to find out, talking about Ponzi scheme, they will continue to be there as tech wizards explore the space to see how to mine fortune for unsuspecting and very ignorant people. What do you think should be the regulatory framework to put in place to manage the digital space so that the scars will not be as plenty as you just have said?
Okay, first of all, the regulatory authority, there's the porous spaces in the registration of these various any company that is going to manage people's assets, right? It should be very stringent. There should be stringent measures to make sure that everything check with the regulatory authorities, right? They are check everything. Check everything. We saw when the EFCC came for Binance based on their dealings in Nigeria, and that was very fantastic. And I think this should continue. There were some that might have been registered before now. I think this particular move by the EFCC is very commendable, and it should continue. They should keep trying to research these things because like you said, as we get smarter in trying to discover them, these people also get smarter in trying to get to become undiscoverable. So it's happening just like with a platform like what's it called now, Bybit. We read recently that Bybit was hacked by some fraudsters, right? I wouldn't mention the name of the country that they said they were from. So even these kind of companies can get hacked. So, but regulatory authorities just need to make sure that everything checks when it comes to managing people's funds. You know, some of these things that are permitted in Nigeria are not permitted somewhere else in the world, right? They are not permitted in some countries. There are some countries I've had to deal with people helping people, even cryptocurrency. I've had to help people who live in certain countries abroad buy cryptocurrency, and I see the various steps you need to follow. In fact, for some of them, some of the platforms, you can't buy the very day that you register. They will tell you, the government, through the platform, the government insists that the platform must notify you that what you are doing, the risk nature of what you are doing. And they give you at least 24 hours before you can make the decision. So all these things are things that will be put in place, that should be put in place so that people don't get to lose their money anyhow. And mind you, this doesn't only have to do with cryptocurrency, because sometimes people think that because it's online, that means it's fraud. We saw the companies listed by EFCC. A large number of them are companies who claim to be agro-business companies. A large number of them are claimed to be agro-business companies. So people can defraud people with any kind of business, even with real estate, and put it online and claim anything. So, but regulatory bodies need to not just focusing on, in quote now, companies that are that just trade in digital assets, but even companies that claim to trade with physical commodities. They need to pay attention to all these companies and ensure that Nigerians are fully protected.
Okay, and a final note, what about the fight back of the system, or even those that the AFCC, SEC, and other regulatory agencies are trying to fight for? Some persons just enjoy ventures like this. Some of them know how to calculate the risk. They try as much as they can, or they believe that it can be Peter, who are the early investors, and at the end of the day, they don't get to be Paul or whichever of the twin here that gets robbed to pay the others. And so when there's regulatory scrutiny like this, they frown at it, and it feels like, oh, they're disturbing their investments and they're not allowing schemes like that continue. What do you have to say to such people?
Well, I'll just say keep being the Paul, or keep being the Peter, rather. Keep being the Peter. And I wish you luck in trying to always be the Peter, but there will always come a time where you'll be the Paul, right? I would not, no matter how, you see, for posterity's sake, no matter how an investment, how you profit from an investment, if their dealings is fraudulent, you shouldn't endorse it. That's one of the problems I have with many celebrities, right, who come publicly to endorse companies or endorse things that are outrightly fraud just because of their interest. And that's why you shouldn't just follow anybody's opinion. The internet is porous. Anybody can come to say anything. Foolish people become popular also. So if a foolish person can come say anything, and because he's popular, you can just believe what they say. So what I'll say is that if you believe you are Peter, keep being Peter, right? I wish you luck in your quest of being Peter. You can't stop people from being who they are. You can't stop people from wanting to take the risk. Like I said, all this has to do with your risk threshold. Because something is high risk doesn't mean you shouldn't try it. It depends on what you are looking out for. Some people want quick returns in a short period of time. They want returns quickly, right? And it just depends on your present state and what you are willing to take. If you know you can afford it, why not? But coming publicly to endorse something because I benefit from it is something that raises a question of a questionable character in that person.
Thank you so much, Andrew Ogbe, digital investment consultant. And I like how you signed off there, because we've seen that happen where people are endorsing certain scheme, but when the scheme fails, they tell you, well, I wasn't a part of it. I was only paid to endorse. I was only paid to influence. We should begin to look beyond what people are saying to check out the credibility of whatever scheme they endorse. Thank you so much.
Yeah, thank you, Blessing, for having me on the show.
All right, just in case you didn't get what he meant by being Peter or Paul, you know, Ponzi scheme is more like paying old investors with money gotten from new investors until the scheme can no longer hold. So you might just be an early investor. That's why you're getting return on your investment. But sometimes it's hard to tell which you are, an early or late investor, sir. So you don't get your fingers burnt. Know exactly what you're putting your hands into.